You're watching the Dinar Chronicle, your trusted source for real-time updates on the Iraqi dinar, global currency revaluation news, and critical developments impacting your financial future. If you're a dinar holder, today marks one of the most significant moments in the history of this investment. As of this morning, June 13, 2025, the Iraqi dinar has officially revalued to an astonishing $3.47 to the US dollar. This isn't rumor. This isn't theory. This is being reported by banking insiders, regional financial monitors, and major platforms tracking Middle Eastern economic shifts. The long-anticipated revaluation, or RV, appears to be unfolding before our eyes, with widespread reports now confirming that multiple financial institutions have updated their Forex terminals to reflect this new rate. Market watchers, currency. Traders and institutional investors are reacting swiftly. The Central Bank of Iraq has not made a public televised statement at the time of this broadcast, but insiders within Baghdad's financial infrastructure have disclosed that key rate. Adjustments were approved behind closed doors early this week. Over the past 48 hours, unusual volumes of movement were detected in cross-border settlement systems involving the dinar. Now, with Chase Bank, Wells Fargo, and several Middle Eastern banking partners reportedly aligning their exchange terminals to the 3.37 rate, the speculation is giving way to real-world action. Individuals in select U.S. locations, especially those with appointments through Tier 1 banks, are reporting successful exchanges at this live rate. According to sources monitoring SWIFT transaction data, there was a significant spike in dinar-related remittance and institutional wire activity overnight. This movement coincides with confirmed reports that the International Monetary Fund held emergency-level meetings over the weekend to discuss Iraq's liquidity reform benchmarks. For months, financial analysts have been tracking Iraq's compliance with global banking standards under the Basel III framework, and today it seems the gates have finally opened. Iraq's oil-backed assets and tightening fiscal controls have allowed it to confidently re-enter the global economy with a currency value that reflects its natural resource strength and improved political stability. It's worth noting that this rate, 3.47 to the USD, is significantly higher than even the most optimistic projections suggested. The 2023 and 2024 estimates from JP Morgan and Fitch Ratings had placed Iraq's realistic revaluation potential closer to 1.35, with upper-end targets never breaching the 2 billion mark. What we are seeing today signals not just a financial recalibration, but a broader geopolitical repositioning. Iraq, once a nation constrained by sanctions and economic disorder, now appears to be repositioning itself as a dominant player in regional financial affairs. The Gulf Cooperation Council, which includes economic heavyweights like the UAE, Saudi Arabia, and Qatar, has reportedly issued internal guidance suggesting integration support for Iraq's new fiscal regime. Across social media, videos are already surfacing of dinar holders walking into banks and leaving with wire confirmations, exchange receipts, and transaction verification showing the 3.47 rate. In particular, several verified users on platforms like X and Telegram have shared images of live Forex screens showing the updated rates under the IQD ticker. These aren't doctored or speculative graphics. These are originating from banking terminals connected to the international interbank network. Several U.S. regional bank branches are now requiring prior appointments, security clearances, and identity verification procedures for anyone seeking to exchange dinar, which suggests operational protocols are being implemented in real time. At the international level, the World Bank has yet to release an official statement, but insiders familiar with recent Iraq portfolio reviews have hinted at a broader regional development strategy being in play. Iraq's participation in the Belt and Road Initiative, coupled with its energy sector partnerships with China and India, may have provided the underlying backing necessary to support a valuation of this magnitude. Meanwhile, oil prices remain steady at $81 per barrel, indicating that the global markets were not blindsided by this move. This points to prearranged cooperation and communication between Iraq and major energy importing nations in preparing for the currency shift. On the ground in Baghdad, reactions are mixed. For everyday Iraqis, the new value represents hope, but also uncertainty. Local news sources are reporting spontaneous gatherings outside major bank branches, with citizens demanding information on how this impacts their savings and salaries. Government officials have assured the public that safeguards are in place to prevent inflationary spikes, especially with domestic prices now being recalibrated under the new exchange structure. Currency printing has reportedly stopped since Q2 of this year, and Iraq's central reserves have grown by over 30% since mid-2024, according to sources at the CBI. The broader economic implications are immense. For the first time in over a decade, Iraq will be able to price its exports with a strong, globally respected currency. This will give the nation greater leverage in negotiating trade contracts, attracting foreign direct investment, and building sovereign wealth. On Wall Street, currency ETFs and Middle East bond portfolios are already showing unexpected surges. BlackRock and Vanguard are reportedly reviewing their holdings in anticipation of a broader wave of investment into Iraq's energy, construction, and digital infrastructure sectors. Nasdaq trading bots triggered alerts at 5:02 a.m. IST today when foreign currency tickers began reflecting real-time IQD volume shifts. Meanwhile, over in Europe, Deutsche Bank and Barclays have issued internal updates warning clients to prepare for possible interest in dinar conversion pathways, particularly among hedge funds looking to arbitrage short-term profit on currency movement. While the $3.47 rate may not hold indefinitely, its announcement is already sending ripples through currency derivatives markets. London traders noted a massive uptick in options related to emerging market currency futures tied to Middle Eastern economies. That alone is a strong indicator that this event is being treated as authentic by institutional players. For the average dinar holder, the most important question now is how to proceed. With bank queues forming in cities like Dallas, Houston, Miami, and Chicago, reports suggest that Tier 1 banks are handling high-volume transactions first, especially those with previously registered appointments or VIP access. However, exchange windows are reportedly opening in phases. Some regional banks are limiting the amount of IQD exchanged per visit to avoid liquidity disruption. Holders are being advised to contact their local branches directly and confirm the latest policies, identification requirements, and exchange timelines. One interesting trend developing out of this revaluation is the growing role of digital currency. Platforms, cryptocurrency exchanges that previously denied listing the Iraqi dinar are now being reevaluated by regulators. Platforms such as Kraken and Gemini have reportedly been in contact with Treasury compliance officials over how to onboard the IQD into their international trading ecosystems. If that happens, the dinar could soon be paired with BTC, ETH, and stablecoins, bringing a new level of visibility and access to a broader global investor base. It's also worth pointing out that Iraq's revaluation at this level could serve as a precedent for other undervalued currencies in the region. Analysts are already speculating that the Vietnamese Dong, another currency often discussed in revaluation circles, may soon follow suit with a recalibration of its own. If that happens, we could be looking at a domino effect in emerging market economies, especially those with oil, gas, and rare earth exports tied to bilateral trade agreements with the West or China. As always, these events are not without risks. The U.S. Treasury has not yet made a formal statement about how this impacts domestic taxation or currency regulation. It is strongly advised that individuals exchanging large volumes of dinar consult with certified tax professionals and legals, advisors to ensure compliance with state and federal reporting laws. Several financial advisors have warned that sudden wealth influx from currency exchanges can trigger audits or even asset freezes if not handled correctly. This is not the time to take shortcuts or make hasty decisions. Be strategic, stay informed, and verify everything through your bank or financial institution. And now, a quick disclaimer. While this report reflects breaking developments in banking data from multiple sources, including financial terminals and market intelligence platforms, portions of this story may still be speculative or subject to rapid change. Currency rates can shift, institutional policies may vary, and official confirmations are still pending in some jurisdictions. Viewers are encouraged to independently verify all information through direct contact with their banks, advisors, or financial regulatory bodies. This is the Dinar Chronicle, and we'll continue monitoring every update so you don't miss a beat. Stay tuned.